Ladies and gentlemen, welcome to this new webinar by Solar Plaza. Today we'll be talking about navigating the European energy market and BESS opportunities. So huge topic, very current. We'll try to be as brief as concise as possible and hopefully give you some very interesting insights. Today joining us is Julien, who is the Chief Strategy Officer from Nord Pool, the power exchange company, and Michael Salomon, President of Clean Horizon. Michael, who already has been with us during some webinars, and he'll be talking about the BESS related opportunities in the Nordics market. Let me start with just a few mentions. Of course, today's webinar is going to be very analytical. I went a bit too fast, apologies, but you saw who are our presenters here. We'll have a Q&A in the end. Given that we have quite a lot of slides, we'll keep the Q&A at the end. And related to that, there is a question box, so feel free to send in your questions. We'll try to answer them all based on availability. If not, apologies, but eventually our speakers will revert with the answers. And also, if you have technical issues, use the chat box. Apologies because we have a technical issue today with the cameras, so you won't see us as speakers, but that's just a minor, hopefully a minor remark. But again, the presentations are quite analytical, so hopefully you'll be focused on the text and all the slides. Just a few remarks as I move forward. Solar Plaza will be hosting two of our flagship events in the Nordics region. Solar Plaza Summit Nordics in Copenhagen on September 16th. Given that the cameras don't work, Solar Plaza generosity increases. So for you that are attending the webinar, instead of a 10% discount, that will be changed to a 15% discount should you wish to join. And a flagship event also that we launched 2 years ago, seems incredible, talking about solar and BESS in Finland. Who would have thought about it a few years ago? But we will be also present in Helsinki in November. Let's see if we can just quickly move the slides. I might have some difficulties. Maybe I'll ask my colleagues in the background if we can kindly move forward, but I don't want to also take too much. Here we go, exactly, on November 13th, where, of course, we'll be debating quite intensely the topic of BESS and the power market in that region of the world. That said, I don't want to take too much time. I will leave the stage to Julien Cosset, Chief Strategy Officer of Nord Pool. Julien, the stage is yours. And as mentioned, send in your questions. We'll be having the Q&A in the end. Julien, stage is yours.
Thank you, Nicolas, for the introduction, and hello, everybody. So it's a great pleasure for me to present, a bit of a overview of the electricity market so far in Europe, and also the consequences for the storage opportunities. I mean, we've been talking a lot about energy transition and what is happening after the energy crisis. I'm having an issue with yeah, okay, it's fine, then it's coming. If someone can, I don't have any control on the slides, sorry guys. Okay, so yeah, so we've seen what's happening after the energy crisis, and there is probably a momentum for storage. I mean, there is every year we count the number of negative prices that we see on the market, and you have some numbers here from the past few years and in a couple of countries. Over the past 5 months of 2025, we have been achieving record numbers of negative prices, and the year, and especially the summer, is yet to come, and we will probably see another record year of negative prices also in 2025. So it's a sort of indicator that there is a lot of demand that is not flexible, and of course, if it's not flexible, then it could be a good opportunity for storage. So I wanted to stage the presentation with this one, and showing again the volatility that we see after the energy crisis. So some words about Nord Pool. So as introduced by Nicola, we are a power exchange operating in 16 countries across Europe. We are owned by Euronext, so the pan-European stock exchange, and the TSO holding. And basically, we offer trading platforms, so on day ahead and intraday trading. We also provide clearing and settlement in order to make sure that the transactions are financially settled. We also couple the market, and we provide data and other transparency functions on the market. And we also provide consulting services and an academy. Basically, we are present in 16 countries, but we are also operating we are also supporting 5 other countries in Europe with our technology, so which means that their market is running on Nord Pool technology. And finally, we are around 150 employees with a lot of nationalities and offices spread across Europe. The way we are positioned in the value chain currently is that we provide markets for day ahead and intraday. As you know, the day ahead market is composed of an auction that is happening every day around noon for the 24 hours of the next day. Later in the year, that will be for the 96 quarter of an hour of the next day, so with the introduction of 15 minutes product. We also operate a continuous intraday platform that is operating on a 24/7, which is also completing with 3 pan-European intraday auctions that are happening at 3 in the afternoon, 10 in the evening, and 10 in the morning. And actually, this is the market that we operate today. And of course, after that, you have the so-called reserve markets, the ones that are used for TSOs to actually make sure that there is a proper balance of the system and there is the frequency of the grid is still maintained and so forth. And also, we are going to expand our activities together with Euronext, our main shareholder, to financial markets. So by Q1 2026, we are going to provide power derivatives and especially power futures in the Nordic and Baltic region. So stay tuned for this launch, because it will be an important piece of the liquidity in the Nordic market. And I'm going to talk a lot today about day ahead and intraday market especially. We also have a data offering that is enabling not only trading participants, but the general public to actually have access to our data. And this data is basically provided through 2 main means. The data portal on the one hand, which is providing a graphical analysis and also numbers and tables. And also this data is accessible through our APIs that provide seamless connectivity for automation. I still don't have the control over the slides. So yeah, if someone, yeah, so that's our data offering. If we can continue. Okay, so what about BESS optimized revenue stacking? So basically, it's all about stacking several values. So there is a so-called day-ahead arbitrage value. I mean, a battery is able to basically buy low and sell high. So it can happen on the daily auction, a day before the delivery of the electricity. There is also potential intraday arbitrage value that can happen. There is a continuous market plus the 3 intraday auctions. It's also a question of buying low and selling high at the moment, until potentially very close to the delivery of the electricity. And there are also the other value, which is currently the most known by battery optimizers, which are the ancillary services to TSOs, supported grid stability through the reserve market primarily. Of course, there is also a potential other values that can be, captured by batteries. That could be the green value, if you are able to store green and inject green. But currently, this is something that is not really possible with the current set of guarantees of origin the way they are currently being implemented, but maybe that will be possible in the future if we take into account the possibility of having granular certificates based on an hourly basis, for example. So market fundamentals and BSS revenues, I think there are two sides of things, right? The first thing that batteries need is liquid markets to rely on in order to make sure that they can execute transactions and thereafter inject and store or withdraw electricity from the network. And the second aspect is of course to have the proper price incentives. And since at Nord Pool we have a lot of data, then there are a lot of things that I can tell you about both the liquidity of the market and also the price development. And we are going to look at three horizons: day-ahead markets, intraday market, and especially the continuous market, and ancillary services reserve market from the TSOs. And first of all, is to have a look at the liquidity of the market. So next slide. Please. And on the liquidity of the market, first and foremost, the daily liquidity has been growing steadily. I mean, this is the market that is the primary market so far on the spot electricity. As you have seen, and these are the volumes exchanged in the 16 countries where Nord Pool operates. So this has been growing steadily from 900 terawatt hours to around 1,000 terawatt hours. And going forward, we see that this day-ahead market is still going to increase by around 4% per year. It's mainly because of changing the production patterns from fossil fuels to renewables. We expect some post-crisis demand recovery, electrification of economies, electric mobility, and so on. And of course, what is also very important is the interconnections and power balance that are increasing the number of transactions between the countries. So we expect this market to grow steadily, as opposed to, and that's my next slide, is the intraday liquidity. So on intraday liquidity, the picture is totally different, which means that we have experienced a 27% growth in the market in total. At Nord Pool, we have had even an even higher growth over the past few years, even a three-digit growth. And going forward, we see the market also continuing growing by 22% per year. And of course, it is fueled by major drivers, which are renewables penetration, the fact that you have much more volatility with fluctuating demand and supply, flexibility and arbitrage value. There is also a huge technology change with the arrival of algorithmic trading in many countries in Europe that is helping and fueling the liquidity as well. And one of also the latest development on the market that has been introduced was in December in 2024, when the shared order book of all exchanges have been happening for the last hour in the central European region. That made the trading possible on Nord Pool very close to delivery and opening up to more arbitrage values. We're going to come back to that later on. So next slide, please. And here we are going to see the third part of the stack, which is the ancillary services. I take a look at the Nordics because I think this is where it is the most prominent. If you look at what the TSOs are expected to purchase in terms of all types of reserves, so should it be a frequency reserve or the containment reserve, then if you look at that, the growth, the annual growth in the next few years will be around 7%. But if you look at only the automated frequency reserve, then you see it's a 14% increase. So there is a great focus put on frequency and grid stability. And of course, it's due to the same mega drivers, which are renewable penetration and the fact that you have different locations between demand and supply, plus the fact as well that there are much more possibilities with joint procurement and activation platforms such as Marie and Picasso that are covering several countries at the same time. Next slide, please. So we've seen that we have, quite liquid markets to rely on, and the fact that they will also continue to sustain possibilities to trade. And now the second chapter is about the proper incentives. And in the next slide, then I show a couple of values on the day ahead values that can happen here. So next slide, please. Yeah, so if you look one example, for example, Germany, and what we have pictured here is if you take the day ahead price that you have every day, then we take the mean and the max of the price every day from January 2023. And to make it prettier, we calculate a 30-day moving average to make sure that we have not too much noise on the graph. And basically what is striking is that this spread between the mean and the max, that is the value that can be captured by a battery on the day ahead stage, has actually tripled over the past 18 months. And if you look, the minimum value was around 55 euros per megawatt hour. Then now we are talking about 160, 170 euros per megawatt hour on a day ahead stage. And of course, this is due to two major things. So the max prices tend to follow the upper part of the merit order, which means that it's driven by gas prices, CO2, coal prices. And of course, the minimum prices are basically driven by the penetration of renewables and also the net residual demand. So if you basically have a lot of renewables on one day with a very low demand, of course, you will dive into negative prices, and that will increase the spread that you have on a given day between the mean and the max price. So this is the example for Germany. On the next slide, I show another example that is telling you the differences a little bit between the countries. So we took SE2. SE2 is in Sweden. It's in the upper part of Sweden, so more the northern part of it. And if you look at the same indicator between the max and the mean day ahead price, then you can see that it's a totally different picture, because the max price are less correlated to continental Europe, because you are in Sweden, you have some network constraints, so the sort of attraction of the German price is not there. Plus the fact that there are fewer negative prices than what you can see in Germany, for example. And of course, it means that the value that a battery can get on a day-ahead basis is much lower, and it has also actually reduced over time, mainly because of the overall reduction of prices that we have seen over the past few months. So next slide, please. So if we make a couple of comparisons, so we basically put the graph here for 7 countries or 7 bidding zones, and it's very clear that you have, for the day ahead stage, two major clusters. You have the clusters of countries which are influenced by renewables but also fossil fuels and low wind power production in 2025. These have a spread of higher than 120 euros. So it's Poland, Germany, to a certain extent Denmark, especially for DK1. And you have other countries which are much more influenced by nuclear and renewables, including wind and hydro reservoirs, for which you have France and Norway and Sweden, and for which basically the spread is much lower than 120. So that was on the day ahead stage. Next slide, please. Now, if we look at the intraday daily spread, and if we look at Sweden, for example, on the one hand, we've seen that day ahead spreads were not really interesting in Sweden, but if we look at intraday spreads, which is the graph that you see currently on the graph, the spread has been multiplied by 3. So it was around 80 to 50, 80 euros in the past. And we have seen that, especially in the recent months, this spread has been highly changed and increased to around 300 euros. And it's due to several factors. One thing is the implementation of the flow-based at the ahead stage, but also in the introduction of the new schemes for fast frequency reserve in March 2025 in the Nordics, and you can see the clear change in between March and May, that the volatility is higher, and actually the temporal spreads are actually wider than what they are on a day-ahead stage. Next slide, please. So on the next slide, we picture France for intraday as well. And France is also a country for which the intraday value that can be captured by a storage is actually quite relevant, because it's more than €1,000, which is really an important value. And I think it's also due to the fact that it is both exposed to gas, CO2, and coal prices because of the proximity and the cross-border capacity with Germany, but also driven by renewables and a lot by nuclear availability, and especially currently this very low net residual demand. Next slide, please. Germany is another outlier example. Intraday spreads have been really important over the past few months. One thing that has been a game changer, especially in the prices that we are providing to our clients, is the possibility to have access to last hour shared order book, as I said, in December 2024, which means that the possibility of trading at Nord Pool, especially in Germany during the last hour of intraday, are pretty high. And it means also that we see huge spreads between max and min intraday prices in Germany, especially close to delivery. And this is also because the fact that the imbalanced prices are influencing the market participants and their willingness actually to pay high price or very low price close to delivery. So there is a very important value there. Next slide, please. So if we look at the comparison together with Germany and a couple of other countries, it's very clear that at the moment, Germany is an outlier when it comes to a value of intraday that can be captured by a battery. And of course, those arbitrage opportunities are possible. The second most interesting country, if you look at this list, is probably France, and then you have much lower opportunities in other countries from the perspective of intraday. So next slide. Yeah, so this is the same picture without Germany, which is somehow dwarfing all the others, but you can see that France is way above 400 euros per megawatt hour since 2025, and other geographies are between the 200 to 400 euros of arbitrage value. Next slide. So what I wanted also to share with you is what is happening on the TSO market, and especially the influence of the frequency reserve on imbalance prices. If we take a look at DK1, for example, and if we compare the day-ahead price that Nord Pool is calculating together with the imbalance prices of Energinet on DK1, you see that there is a huge volatility. That is also an interesting value that can be captured by batteries. These values have been very much debated recently in the Nordics, and especially because of the introduction of the 15-minute resolution for imbalance settlement, which has caused, of course, a lot more volatility on the imbalance market. Next slide, please. And especially to illustrate that, we show here the difference between May last year and May this year. So you can see that in May 2024, which is the curve in black here, we have seen some volatility, but not as much as what we see in May 2025. So of course, this exposure, this risk exposure to market participants push them, of course, to trade on the intraday market, but also battery can be a sort of edge to this risk. Next slide. So we've been providing many examples across Europe, but what does it say basically to especially to storage operators and storage capacities is that post-crisis there is a momentum currently for storage capacities. First of all, I mean, if you look at the price shape currently, we see duck curves, we see a lot of volatility on intraday, we see higher spreads, higher arbitrage opportunities as well. So this volatility is really a key driver and a positive driver for storage. The second aspect is on the volumes. Of course, we have stronger liquidity on intraday. There is also a need to flatten the curve somehow and to move demand, especially in flexible demand. And of course, we have seen as well that there are increasing needs for reserve capacity from the TSOs. And we have a couple of other structural changes in the market design in Europe. Of course, we've seen the impact of the 15-minute imbalance settlement in the Nordics, the introduction of 15 minutes intraday as well, plus the fact that we are going to experience also a big bang change on the day rate stage across Europe with the introduction of 15 minutes contract on the day rate stage that will also create additional opportunities for storage operators. And basically what we do at Nord Pool is we provide all facilities to enable the storage operators or their market access providers to actually bring their flexibility to the market. We provide liquid, transparent, and secure access to day-ahead and intraday markets. As I said, 16 countries plus 5 others for which the local power exchange is using Nord Pool trading technology as a service. We also provide market data offering in order for companies to understand the market dynamics, to look at storage profitability, to be able also to use indices. And as of Q1 next year, we are going also to introduce liquid and competitive power derivatives in Nordics and Baltics in order to hedge the position going forward. So very interesting development ahead for storage. And I think the market is giving a lot of signals that we need more flexibility and that we need more storage capacities. And I think that that is a nice opportunity especially for Clean Horizon to show and to help market participants to also navigate the storage market. Thank you for your time.
Thank you very much, Julien. I will then now leave the microphone to Michael from Clean Horizon to the second part of the presentation. Just a reminder, send in your questions because after this one we'll have the Q&A. Michael, the stage is yours.
Yeah, hello everyone. Thanks to you all. I'm going to work with the assumption that everyone hears me. And yeah, thanks to the team at Solar Plaza for having helped us set us this webinar, and also kudos to them for trying to fight GoToWebinar to get the cameras working. It didn't function, and it's really, I think it's a platform-wide issue. Please don't blame Solar Plaza. All right, so I'm Michael Salomon. I run Clean Horizon. I think we can go to the next slide. This is a company I've been working that I created 15 years ago, and what I'm going to be doing today is I'm going to do three things. I'm going to talk about propaganda, as how I like to call it, which is basically introducing Clean Horizon. Then I'll talk about just leveraging, I would say, sort of making a segue with what Julien from Nord Pool said. I'm going to try to show you very briefly how we use this data to the data that is made available, historical data, to compute the business cases of storage. That is, and I'll get to this. Something we call the storage index, which is very peculiar, and then I'll conclude with, I would say, long-term assessment of profitability for storage all across Europe. Okay, yeah. So great propaganda. Basically, look, I think I don't know how many propaganda slides I'm having here, but let's say, yeah, just want to say three things, and that'll be it. And probably only one of those three things really matters. So I'll let you guess which one it is. Okay. So first thing first, for those who don't know us, I've been running Clean Horizon since I started the company 15 and a half years ago. We have been since then a one-stop shop energy storage advisor, both acting as a market advisor and as a technical advisor. Blah blah blah. Essentially, we know storage. That's all we do. We are a team of 35 something people, both as a market, both selling advisory and tools, data sets, and um, uh, yeah, SaaS tools, and I'm going to discuss some of them today. We can just go to the next slide. By the way, one of our key things as a market advisor is to be able to forecast energy and ancillary services prices. So bear in mind everything Julia mentioned, which by the way has a lot of very good data. I think you should request politely from Solar Plaza that they provide you with the PDF of this presentation. I'm just going to do it myself because it's very good.
Absolutely.
Oh, good,
Absolutely. I forgot to
good.
mention. Sorry, Michael. They will be shared. They will be shared. They will be shared after every 1 2 days. Sincere apologies. I forgot to mention that. I
That's
forgot.
good. So I was gonna request it anyways because I want to get Julian's slides so because they were that good. But everything he mentioned is historical, okay? In the sense that it's discussing the past historical data on the 16 countries where Nord Pool operates. As you see, we have very good overlap with Nord Pool. There's probably, I think, two countries they're covering that we don't cover, which is Netherlands and Norway, but that ought to change, I hope very soon. Um, but what I'm showing here is not about historical data, it's about future price data. Okay, so this is the countries where we provide or we will provide ancillary and ancillary services and energy price data. And if you could just go to the next one, the of course, a forecast is a forecast is a forecast, meaning it's not necessarily very accurate. I just took an example here just to tell you, whatever, it's propaganda. I said it in the first place. So of course, please don't believe me. But hey, I'm going to say it anyways because it's not bad. So, it's very difficult, of course, to compare your forecast to reality. It's difficult because sometimes you forecast something that happens next year and something completely changes, and now even the mere act of comparing is pointless. Or sometimes it's difficult because it's difficult for your ego because you forecasted something and you're so damn wrong that it's so painful you don't want to discuss it. Okay, now here's an example of why I think we don't do too much of a bad stuff. What I'm showing here in the bar charts, okay, this is not a forecast of a price on the day ahead or a price on ancillaries. No, it's a bit more complex than that. It's, or simple if you wish. It's based on the forecast for the year 2025 that I was that I published last year. That's the dark blue one. I run those numbers into a dispatch simulator. Again, I'm going to talk about this a bit more later. Dispatch simulator called Cosmos. Essentially, what this dispatch simulator does is it just simulates a trader. It simulates a route to market. It's an imperfect foresight tool. So basically, really mimicking what a human trader would do. And the purpose of that was to compute how much money a storage would have earned for the first 4 months of 2025 based on, number one, our assumption of what the prices would be in 2025 and, run through our actual trader. And I did the same. I call this the dark blue bar. And if I look at the light blue bar, it's the exact same analysis, but now with the forecast data we issued just at the beginning of 2025. So first things you see is, okay, well, it didn't change so much. So at least if we're selling really wrong stuff, we don't change our mind every semester. But then what I did is in May, just when we did this slide like a month ago, I compare this to what's the straight line on top of it at 305. What this is, well, I run the same Cosmos simulator, but this time, instead of running it on our past vision of the 2025 data, I run it on historical data, really the data that, the market prices that really happened on the market. And what I obtained was, almost the same value. I would say I obtained a bit better, which tells me that not only my forecasts are consistent because they don't change too much, not only are they accurate because I'm not too far from reality, but they're conservative because I tend to be below reality, and I like that. So I just wanted to share this. So when I will be talking a lot about the past and the future. I'll try to make it as clear as possible when I'm talking about the past or the future. But I just want to, provide this preliminary remark, which is when I talk about the future, I think I'm being reasonable and conservative because of this backtest that I'm showing here. Okay, let's try to go to the next slide now. And again to the next. Okay, wait, no, don't go. Stop here, stop here. No, thank you. So that was my propaganda introduction, and just some kind of disclaimer on what I'm going to say. Now, I will be now talking about the past, and I will take it exactly where Julien left it. That is, Julien said, "Oh yeah, we at Nordpool are, very good at, measuring, amassing, distributing data sets, data, historical prices," and he took some examples and used those data to provide some insights on how the market is moving. The what we have done at Clean Horizon, maybe some of you know, some of you don't know, I'm not sure, but we have created a tool which is a storage index. And what the storage index is the following. Remember, I mentioned that with our, as an advisor, we have to make a lot of work at simulating storage assets because we want to help investors decide if investing in storage makes sense or not. And I'll discuss that in my third section. But this tool, we've designed it over the years, we've perfected it, we've maintained it, we sell it, we distribute it. It's called Cosmos. And what we have started doing with Cosmos earlier this year is just applying Cosmos not on forecast data, but actually on past data. So if you can go to the next slide. The next slide is a copy paste of my website. Next slide. And voila, that sums it all. So you can read the slides after. But what this really means is on the next slides, what is the storage index is just, some kind of masochistic, gizmo that tells you how much money you could have reasonably earned last month. Remember what I showed earlier is we tend to be reasonable. We tend to not overreach in our forecast, but also in our simulation. Again, if there are any questions, maybe I'll try to take them after. So this is how much you could have reasonably earned last month. And if you can go to the next slide, this is how much you could have earned last month with storage, but you probably didn't earn it. And you probably didn't earn it because of two reasons, and that's on the next slide. Reason number one is, well, your project is not out. So obviously, what can I say? I'm an advisor. I take every opportunity I can to make my unjust and unfair, marketing. Sure, if you had called us before, maybe you wouldn't have screwed up that project. Fine, okay, that's an easy one. But most likely also, maybe your project is operational, but you didn't earn that money last month because, and that's the key, because in most cases, almost all cases, the asset owner is not directly operating on the market. There is an intermediary. That intermediary is either called a trader or a route to market. Route to market is more in the UK. An aggregator, that's more in Finland or France. Don't ask me why. We have the same word as the people in the Nordics. And in Germany, they call that an optimizer. For the sake of simplicity, during this discussion, I'm just going to call it a trader, because that's really what it is. It's an entity that trades your asset on the market. Now, the traders, sometimes, if you're into that, they can provide you a tolling agreement, so you don't really care what they do or don't do on the market, because you get your fixed payment and you look the other way for the next 10 years. But in most cases, there is a commission-based system, either total or partial with the floor, doesn't really matter, but there's a commission base. And as soon as there's a commission approach to the business model there, you have no clue as an asset owner if your trader is behaving uh, fairly or not. Why? Let's assume that you own the asset and you're very astute and keen negotiator, and whereas your trader was asking you 8% fee on however much they were generating on the market by trading your asset, you negotiated down to 5%. Congratulations. But you know what? Your neighbor is an idiot, never negotiated anything in his life or in her life, and he or she just signed that 8% contract. But guess who won? Guess who's winning in the end? It's not you, because every time the trader is making 1,000 euros for an asset, it's taking 80 euros for your neighbor and only 50 euros for you. So he's making almost, what is it, 60, 70, 80% more when working for the neighbor. So your negotiating skills just spectacularly backfired on you. You look like Donald Trump, right? So the idea of a storage index is to be able to provide a neutral independent benchmark, which works not in one country, but works in every European country, at least every European country where we operate. So if you go to the next page, and essentially what it does is it looks like that. So I just took the Belgium example because you know what, I had to take something, and that's the first one that you can see on our website. That one is free anyways. And as you see, you can spend hours trying to interpret those curves. Each point in those curves is how much money could a 1, 2, 4 hour storage asset have earned in Belgium over the past couple of years. And you see, for example, there that something seemed to have happened in November 24. Well, yeah, what happened was uh, Belgium joined Picasso, the Picasso platform, and the conditions have changed. For example, the spread on AFR energy settlement dropped 40% from close to 800 euros per megawatt hour down to 500 euros per megawatt hours. Then the capacity prices also fell. So good, those markets became more efficient. The over remuneration of storage fell. It fell, but not so low. Um, as as a good, I would say, um, uh, quantity to bear in mind, take the 2 hour curves. That's the purple curve, right? Take a 2 hour storage, and again, that's how much money the storage, if it had been 100% available and if it had been working over the past few months, this is how much money it would have earned every month. We multiply by 12 to speak in annualized revenues, because otherwise it's difficult to have, I would say, orders of magnitude by default in your brain. Um, a storage asset of 2 hours in current capex conditions, if it's making in Belgium, taking into account the grid fees, I think it have to make, don't have this by heart, but I think it have to make 110,000 euros per megawatt per year. And if you were making that much money per megawatt per year for 15 years, okay, your unleveraged capex would be 15%. Oh, I got this wrong. Your unleveraged IRR would be 15%. Now, as you can see, even after the prices dropped due to the joining the Picasso platform, we're still more than twice above that number. As a matter of fact, If you look at, I do not disclose it here because those numbers are too high and I don't want to look ridiculous, but I can disclose it, at least orally. Um, if you were looking at, you see the price, the latest one that's for April, okay? If you look at the number for April in Belgium, your IRR, again, if it was repeated 15 years, for 15 years, every month, your IRR over 15 years would be 41%. But that's nothing compared to, again, I'm not showing it here, but it's available online, so you can go and check it for yourself very easily. If you are doing the same thing in DK2 in Denmark, take the price you have there, convert it into IRR with the specific Danish rules, that IRR over 15 years would be 94%. Do this in Sweden, IRR would be 105%. Do it in Poland, IRR would be 98%. Do it in France, IRR would be 93%, etc., etc. Again, I am not talking about the IRR of a project that you start in April. The only thing I'm saying is, given the level of revenues that can be extracted from a storage asset on all those countries based on the historical prices that Julien has mentioned, if I'm a reasonable, if those market conditions were to repeat for 15 years, that's how much the IRR of a storage asset traded by a conservative trader like my tool Cosmos would make. We're talking 3-digit IRR, okay? So everything, all of those things tell you one thing, is that the current market conditions for for a lot of reasons are such that it makes very little sense not to start heavily looking to storage, either coupled to PV for hybrid plants or standalone, you name it. Now, if you can just go one more slide, by the way. Yeah, all right. So, well, right now in my website, it works for 7 countries. We have more coming. And like I said, so I did just put the ones for Belgium. But again, you could take that curve for one country, and on each curve, we could have a lecture, like a 1-hour lecture, explaining the rationale, the reason why the 2 and 4-hour curves are so close, the one and just forever. Okay, so even though it's only 40 freaking data points, again, it could be as many hours of discussions. Let's go to the next slide. The one thing that I want to mention is what I just showed, okay, are aggregated values for at the country level. Now, and all of that, please go ahead, download it, look at it, distribute it, please. And if you lose money because of it, don't quote me. If you make money because of it, never forget us. Okay, just FYI. The now, what we don't show on our website, and okay, that I just want to disclose now, and not just for marketing or propaganda reason, because I want to say something concrete about it, but what I'm going to discuss now is something we sell, we don't give. Everything I mentioned up to now, I was only providing you 1 point per month. I think I made that clear, and I only provided a view of the total amount of money a standalone storage could have made, in the previous month in a given country. I didn't disclose the so-called revenue stack, you know, nor did I disclose the revenue stack. I didn't disclose the revenue stack, and I didn't disclose how things were changing day to day either. I just had an aggregated value per month. Now, we provide the possibility as well to disaggregate the money earned by the storage assets in a given country, and to look at, that's called a revenue stack, which I'm showing an example here, and also to look at how this revenue stack changes every day. And we believe this kind of element, this kind of data set, is actually the sort of the missing link, the key to make any trader contract, again, by trader, I mean route to market, optimizer, aggregator, to make any trader contract just more bankable. Why? Here's the following. Of course, the most bankable contract is the tolling agreement. That's it. You can finance that. But those are rare and tend to be even rarer because for a trader to provide a tolling agreement, it means that this trader is stacking up debt and at some point it's stacking up risk, let's put it this way, and at some point, or debt, and at some point, there's a limit because in the end, you're just asking a trader to guarantee you against, drops in the market because they provide you a fixed rate for your storage for a long period of time. Now, any other, um, any other, as I said earlier, any other trader contract, route to market contract, have this inherent bias that I mentioned, which is you don't know, you have no way to check what the trader is doing. And by providing not just a 1 point per month, but a daily itemized revenue stack, it makes the contract much easier because you can index the contract to the values there is on your screen right now. So use those values as a floor, and then if in my example on January 8th your asset was under maintenance, it's very easy. Just remove the value from this index for that day and then have a recomputed index that you can disclose with your route to market. So we believe this is what the industry needs, and that's why we provided it, and that's why we're very happy to discuss it today. And again, the value there is not just to have it, is to have it all across Europe. Because if you have one in Germany and another one in France and yet another one in, then it's very difficult to have a harmonized um, management of your assets. You know, if you can just go to the next slide, so basically, what I discuss here is I just introduced a concept, okay? Or for those of you that didn't know, I hope I didn't know about it. I hope I helped you explore a bit more this concept. And again, everything I've used so far is based on the past. Now, if we can go to the next slide as a freebie, and voila, I made my point very easy, okay? I will now be talking about the future. Anyone who doesn't get that reference there does not should quit this should drop this webinar. You don't deserve to listen to us, but you understand what this is. This is a time machine, futuristic one. Well, voilà, you get it. The As a sort of a conclusion to this discussion, I'd like to not just provide, because Julien made an effort to provide a lot of data, and essentially, yes, I showed some data, but not as much, and I only discussed concepts. I'd like to provide at least one more piece of data. So if we can go one more slide, I'm going to show a slide that I showed earlier, which is the countries where we do forecast. You get the DeLorean in your brain, right? You know I'm talking about the future now. I hope I made this super clear. And I'm going to go to my last slide, which is the next one. And my last slide is what it is. Okay. I just took the price forecast we have in however many countries that fit on that page, and I just look in our central scenario, what is the best IRR we have using our price forecast. Again, now we're talking about IRRs that are obtainable because those IRR are based not just on assuming the price on the market from last month repeat unchanged for the next 15 years, which makes no sense, okay? But what we're doing is we're taking our central scenarios when we make a price forecast, as anybody does. We, of course, always have three scenarios, low, central, and high. So I'm discussing the central one. And we have a central scenario for Poland, taking into account, the local constraints and opportunities in this country, the same for Belgium, DK1, DK2, Sweden, etc., etc. So taking my central scenarios with where prices tend to drop, right? And we all know why the prices tend to drop. They tend to drop, especially on capacity-based ancillary services, where storage is pushing away the expensive assets. And I'm taking those decreasing prices and now injecting them into Cosmos to simulate how a storage business case would look like into those countries. And based on that, I compute an unleveraged IRR. And what I see in most countries is IRR that are, there's very few countries where I get IRR in my central scenarios that are below 9%, that are below 10%. I actually didn't put it here because I forgot. Sorry. It's only probably in Italy we have lower IRRs, but that's actually due to the Maxe scheme, which is probably going to be, we think, not very profitable, but superbly bankable because these are long-term contracts with essentially with the government or the TSO. So, and in some countries where we still have very high capacity prices, like Poland, the first few years are decisive and allow, we think, asset owners to obtain IRs north of 20%. Again, talking on leverage. In Belgium, we have capacity prices, but also imbalance prices that make the business case pretty interesting. And and et cetera, et cetera. I guess it will be a bit difficult to explain everything in just 1 minute that I have left, but I just wanted to at least share this simplistic, simple view that, okay, it's just a bunch of bar charts on a white page, but what it is actually the result of in-depth modeling of every country and then a detailed modeling of a realistic storage asset based on the in-depth modeling of every country, which allows me to generate prices. So I thought this piece of information could be a nice and polite way to finish this presentation. And maybe we can just go to the next slide, which I think has my name, no? If I'm correct. Yeah, whatever. It's my email. So look, thanks for your attention. I'm sorry the camera doesn't work. And believe me if you want, but I'm actually wearing a tie and I put this just for you, but you'll never know. All right.
Michael,
Thank
we'll
you.
you'll show it at the Surprise Nordics for the
Yeah,
Finnish one.
okay,
I'm
okay.
sure
I'll
it's
bring my
great.
tie.
I'm sure it's great. Nobody left when you saw the time machine. Damn it. So, Michael, then, if you agree, let's go to the Q&A. We want to definitely, we promised it. And as I mentioned to all of you attending, we will share the slides just 1 or 2 days, yeah, via email to those of you who registered. Let's start with a question related to the power market, and it relates to arbitrage opportunities. Of course, by definition, once they get exploited, they don't exist anymore. But do you think that this buy low, sell high strategy will be lowered as it kind of becomes the norm? And if I may add on top of the question, can you maybe tell us when do you think it will be exploited to the extent that it won't be as profitable as it is nowadays? Who would like to take that question?
I, I can take that one, Julien, you don't mind? Because it's more on the
Yeah,
trading on the data.
sure.
Okay, so I think so. The question is, can we argue that buy low, sell high will be, was it lowered, will be limited as more people do it, right?
Yes, correct.
Yeah, so essentially it is, yeah, I think the question is, it's a very good question. It's a question for that applies to any business case of any storage of any commodity. That is,
Mhm.
if you forget the ancillary services or the fact that essentially ancillary services, there's very often two components. I'm going to answer this question, right? There's always but I'm just making a little detour just to put things in perspective. The there's very often two components, one which is capacity based and one which is just energy based. Capacity based is basically where you're being paid to provide capacity that would help the grid fix issues in case they happen. So fine. And those payments tend to go down very fast because it's very easy to put down storage, to sort of put storage on the market and then take those prices down. Now, that being said, if you forget that, in any the business case of storage of wheat, of rice, of water or electricity is basically based on price spreads, right? You store rice at a time when it's not expensive and you sell it when it is expensive. But now, obviously, if that price spreads, the more you have storage, the more you lower the price spreads. And as such, the less you make the storage business case of, again, of any company, the less it becomes interesting. And at some point, storage becomes a public service because even if there's no spread in the price of rice, yeah, well, I know, not very good as an agriculture, but I'm assuming let's work with the assumption that rice only grows and you can only harvest it once a year and you want to eat all year long, right? So you don't have to offload it all year long. So at some point, storage becomes a public service, and if the price spreads don't justify anymore the storage, but you still need the storage because you're going to need the commodity even when it's not produced, then it becomes a public service, which in our world, in the world of energy, you could claim that public service equivalent would be to have some kind of capacity payment, which is just being paid to be here, and that's it. So right now, in the business case of storage, the buy low, sell high, as of today, the reason we have such high potential remunerations is the buy low, sell high is not so much where most of the money comes from. Most of the money comes from, as of today, from ancillary services, and actually a lot from the capacity-based ancillary services. In a couple of years, in 3 years, 1 year, depending on the country, those capacity payments will go down, and this will be replaced by those buy low, sell high opportunities. And when in our models, we those price spreads may decrease a bit, but actually the revenues that you get from managing leaving on those price spreads does not decrease so much, because there is, we believe, so much that will happen that will contribute to increasing those spreads despite storage, and that will be the fact that the markets are going to move to 15 or 5-minute intervals, the fact that there's more and more renewables, etc. So yes, in theory, I fully agree with the statement. In practice, it's more like the buy low, sell high is a business case that will emerge and that will more or less maintain itself, because the quantity of storage, the quantity of flexibility on the market will not end up exceeding the amount of, I would say, volatility that all of the other factors create on the market.
Thank you, Michael. Let me go to Julien. Probably, Julien, if you agree, we could ask this question to you, and then we can maybe take a couple more before we wrap up. So we talked about aggregators, and I would say it's a fair assumption that as of today they're, well, not even assumption, they're probably the only bankable, let's say, tool nowadays for BESS, given the market mechanisms. Do you think so? Let's say we have a certain uncertainty, right, when it comes to forecasting prices when it comes to ancillary services. So do you think that aggregators will focus primarily on these markets, or do you think that they will focus more on the day ahead or intraday markets with their business models?
I mean, an aggregator, I mean, the first function of an aggregator is to provide a route to markets in plural to the storage operator. So which means that they need to have access to Nord Pools, they need to have access to the TSOs, to have access to all places where they can basically make money from the asset. And then, of course, it's a question of optimization, as said by Michael. It's a question of whether the money is in frequency reserve, or if the money is on day ahead on intraday. And then, of course, it will largely depend on the market conditions. It will largely depend on the geography as well. But their primary job is to make sure that the asset is optimized the best way possible, and so they can take the best opportunities in the market.
Absolutely, absolutely, Julien. Thank you very much, Michael. I will go to you because we have some questions. First of all, related to maybe I'll try to put them together. The first one relates to the bankability of
Hmm.
your price forecasts,
Hmm.
and secondly, so you had uh, quite an extensive overview in terms of these IRRs for the batteries there.
Yeah.
Could you tell us about to what duration are they referring? Are we talking about 2 MWh? Are we talking 4 hour duration?
Okay.
What's
Okay. Okay.
the assumption behind those?
Okay. Okay. So in terms of bankability, I don't know, ask your banker, but let's say we worked on the financing of many projects and in many different countries, and um, it's never been the case where our clients have not been able to secure the financing because they work on our forecast, and we've secured huge portfolios. I mean, some public ones. Yeah, there's a 400 million euros portfolio. 1 million euros, yeah, portfolio between France and Finland that basically was financed with our forecast. So we don't feel too stressed about the bankability. Now on the forecast, yes, basically are they for 1 MW systems? No. All the forecasts I made, all the IRs that I showed was for 50 MW systems, but everything I just all the numbers I showed, then I divided by 50 to have numbers per megawatt. And the duration, depending on the country, it tends to be either 2 or 3 hours tend to be the optimum. So I didn't disclose it, but in some countries the optimum was for 2 hours, and in some other countries the optimum was for 3 hours. So I don't have this by heart, but remember that for Poland I think
Mhm.
it was closer to 2 hours, and if I'm not incorrect, for Germany it was more 3 hours. So the duration changes, but for sure, I think we all the models we've done is for 50 megawatt assets and just divide everything by 50 in case we need to show a number per megawatt.
Yeah. Uh, let's, if you agree, German, given that we also we have a lot of questions. So apologies if we can't take them all. Let's have a question both for you, Jan and Michael. A comment regarding possible situation for ancillary markets, right? How would they look like in 3-5 years? Because again, based on simple law of supply and demand, if everyone starts to jump in, then clearly
Yeah.
you don't have that returns anymore. What's your view for ancillary markets in Nordics? Will and if they will become saturated, how quickly will that be?
It's difficult to say because projecting projecting already the projecting direct prices. I mean, energy prices is already quite a difficulty, but ancillary services is uh, even a bigger challenge. It will depend a lot on the procurement the needs of the TSOs, on the volatility of the market. It will also depend on the market rules that you know the TSO may have going forward. So. I guess that Michael, it's quite a challenge for you as well, huh?
Yeah, so obviously, yeah, it is a challenge, and we have to sort of take a stance. I think it was the question relates more to the Nordics. So indeed, for the Nordics, we saw, for example, on I think it's on uh, forgot it. Anyways, yeah, no. So the when we make a price forecast, the difficulty for us is never but the question is never, will the prices go down? The question is always how fast will the prices go down, right? So the, it's and the prices in every single one of our forecasts, the price curves is always trending down to low or very low levels for anything that is capacity based. So in the case of the Nordics, that would be AR for our capacity both up and down, and FCRN and FCRD up and down. The and that means that we always end up like for SCRN at prices around 2 or 3 euros per megawatt per hours, and that's even probably conservative. And for AFR capacity prices, we always end up at Yeah, a bit more because there's a bit of opportunity because there's so 5 or 6 euros per megawatt per hours. But depending on our scenarios, that level can be reached in 2027 or in 2020 or in 2030. Now, what we believe is one of the key drivers in that prices going down is exactly what you said. It's exactly what you said, Nicola. It's how fast the storage jump onto that opportunity because one of the key drivers in pushing those prices down is storage penetration. Because indeed, when storage penetrates it very fast pushes away the assets that provide the service at a higher marginal price, marginal cost, and hence at a higher price. So yeah, we never it's not possible if you find a forecast or if you make your own forecast and the forecast provides you with a 40% or 30% IRR for storage, you can know for sure this forecast is wrong. Because if that's the IRR you get, then that's the IRR the neighbor gets. And so both you and the neighbor wants to get in. And that implies storage, the remuneration of storage will go down because again, it's mostly capacity based in the beginning. And then if the capacity, sorry, let me rephrase this. If you have a storage business plan, which is based on capacity payments, FFR for the Nordics or FCR and FCRD, and you achieve 30-40% IRR, your business case will never happen because your forecasts are wrong. And they're wrong because if you have that business case, so does and the neighbor and you are going to invest, hence push the capacity prices down. Voilà, FYI. So if you see this in a price forecast, throw it away and say thanks, but no thanks. Here's your check, never come back.
Exactly, Michael. I think that's a very nice summary indeed. Gemma, allow me to excuse all the audience if you want to take all the questions because they're quite a lot. Let's wrap up the webinar. As mentioned, we'll send the slides and we will be seeing each other in Copenhagen. Given that you were not able to see Michael's tie, we will even top up the discount by an extra 5%. So hopefully we can make it up for that. But please wear it,
I will
in Copenhagen.
promise. And
After the
if I
summer.
may add something, Nicola, I think you mentioned there's a lot of unanswered questions. We will, I think we will obtain them from you, and we will respond. The questions that are
Absolutely,
for Clear
exactly,
Horizon will
exactly,
respond, and I'm sure Julien will do the same. And it will take us a
Indeed.
while, but it will be disclosed.
exactly. So for those of you who had the question unanswered, you'll hear from Julien and Michael directly. So thank you very much, Julien, Michael. It was a
Thank
pleasure
you.
hosting you, and hopefully till the next edition. Exciting times
Okay.
Thank you
ahead,
for
and yeah,
hosting us. Thank you for your time.
Thank you for your
thank
time
you.
and patience. Thank you, guys. Bye bye.
Thank you. Bye.